top of the class on the road, hey, and it's time to run it up, yeah, you know, yeah. Mask down, put the pedal to the floor, yeah. On the road, here we go, here we go.
What is going on, everybody? Welcome back to the channel. And in today's video, I want to answer a really popular question that I get constantly, and that is, what is the best time frame to trade on? And this answer is not as simple as it sounds. There's not just one time frame that is better to trade than another. This is completely dependent on your style of trading and, more importantly, your life, right? It's more tied to what your life is like. What is your day-to-day schedule? So in today's video, I want to go over the different types of trading, that being day trading, scalp trading, swing trading, and long-term investing. I want to cover what they each mean, what makes a day trade, what makes a day trade different from a scalp trade, and what makes them both different than swing trading or long-term investing. I'm gonna break it down, and by answering these questions, I can help you guys, the Candle Mafia, narrow down what might be the best time frame to trade on. But before we get into it, guys, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great tutorials or urgent market updates that we upload to the channel. Now, like I said, what is the best time frame to trade on is not a simple answer because it's going to be heavily dependent on what your schedule is like. Do you have all day to stare at the charts, or do you have a full-time job? Do you have a part-time job? Do you have a family? This is all going to help you figure out what the best time frame to trade on will be. First, I just want to explain the different types of trading that there is, and then I'm going to try to give you the pros and cons of each style of trading to help you figure out what type of trader you are. And then I'm going to jump into the charts real quick and just show you guys some examples of each type of trade and how long they actually play out for. So the first type of trading I'm going to go over is going to be scalp trading. You might have heard people talk about scalp trading, and what scalp trading is trading on the very low time frames. Essentially, if you're scalp trading, you're going to be in and out of multiple positions per day, and you're going to be trading on time frames like the 1 minute, right? A lot of people tell you to stay away from the 1 minute, and it is for good reason, right? It is hard to get a hang of trading such a low time frame, and a lot of times you will have to jack up your leverage just a little bit to make those moves just a little bit more profitable, which could be a con. And that's going to lead me into the first con of scalp trading, and that is that if you don't have a whole lot of money to trade with, the moves on the 1 minute chart may look big, but when you're zoomed into such a small time frame, a giant move actually isn't going to be a very high percentage when compared to something like the 4 hour. So a big move on the 1 minute might look like a 10% move if you were looking at the 4 hour, but because you're on the 1 minute, it might just be a 0.5%. And that's the first con of scalp trading. It's that if you don't have a lot of money, you'll have to jack up your leverage, and you're going to pay a lot in fees, and a lot of times that can eat into your profit. Now, another downfall of scalp trading is going to be that you're going to have to stare at the charts all day. This is a very engaged style of trading. It's not a type of trade that you want to walk away from if it's still open, right? So if you're somebody that has a busy schedule, maybe you have a family, maybe you have a job, this might not be the right style for you because you might be entering in on a 1 minute chart, and then you might get up to go take care of the kids, or you might have to go to work, and you're constantly going to be checking your phone trying to make sure you don't get stopped out or liquidated. So this is much better for someone who has all day to stare at the charts. If you're looking to sit down and spend all day trading, then maybe you can try to take a stab at scalp trading, but you're going to want to keep a close eye on those positions. So the plus side is it's very exciting and can be very profitable if you can get very good at trading those low time frames. But in my opinion, this is going to be the least popular option for most regular people. Now, for somebody like me who's a full-time trader and full-time content creator, this is something I used to do a lot more of before I had my YouTube channel because I had all day to just focus on trading. But now I have a YouTube channel, which is another full-time job on top of the trading, which makes it much harder to constantly keep an eye on my positions, even if I'm recording videos looking at the charts. It's just a bad mix. So I've actually been more of a swing trader in the recent past just because I don't have as much time to stare at the 1 minute time frame or the 5 minute time frame as I used to. So I think a lot of people really want to be scalp traders. They want to go to the 1 minute. It's exciting. It's fun, but it it could be very dangerous, again, if you don't have a lot of free time to continually stare at the charts all day. Now that brings us to our second type of trading, and that is going to be day trading. Now, I think this is another really popular one. Everybody wants to be a day trader. Everybody wants to call themselves a day trader for some reason. Now, if you're day trading, you're typically going to be in a position all day, and all your positions will be closed by the end of the trading day. Now, in crypto, the markets don't actually close, so the end of your trading day could be at 4 in the morning. But essentially, with day trading, it just means that any positions you're in, you're just going to be in for that day and then closing out those positions by the end of your day. Now, this is also a very short-term trading style, but not as short-term as scalping, so you will have a little bit more time to let these trades play out, and you don't have to stare at something like the 1 minute constantly when you're in these trades. Typically, you're going to find these day trades between the 15-minute and the hourly charts, so you're really going to be finding these trade setups on those time frames, and you're going to let them ride all day, and if you're in profit, you could close them out at the end of the day, making it a day trade. Now, the pros of this is that it's not as short-term as scalping, so it doesn't require that sense of urgency and engagement that scalp trading requires. Now, I will say it is still a short-term trading style, so you will want to keep an eye on these trades pretty closely. Again, still probably not going to be the best trading style for somebody with, say, a full-time job, but maybe if you like to trade on the weekends, or if you have a couple days off a week and you work part-time, you could day trade on your days off. That's kind of what I would recommend, but if you have a full-time job, I wouldn't really recommend day trading because you're going to be constantly checking your phone all day long at the job. You could get in trouble with your boss, and then you're not going to have any money to trade with. So that's not a good mix. But the pros of day trading is I think it's kind of a happy medium, right? You get not instant gratification or instant misery if you're getting liquidated, but it is a good mix between longer time frames and the shorter time frames. It's kind of just a nice little middle ground. And that's going to bring us to our third type of trading, and that is going to be swing trading. Now, you could be in a swing trade from anywhere up to a couple of weeks, anywhere from multiple days to multiple weeks. It is a longer term style of trading, and this is probably gonna be the best option for most people out there who do not have a ton of free time. If you have a full-time job, in my opinion, you could easily swing trade. You could find a nice entry on a weekend or even at night. Thank God the crypto markets do not close. You know, even if you get a free minute and you get a nice setup, you can set some alerts on your trading view to help you find entries, and then you can get into that trade, go to work the next day, and not have to check it constantly because you're planning on holding it for at least a few days. So the pros of swing trading, in my opinion, is going to be that it's probably going to be the most popular option for most of you guys out there, because I assume most of you guys have a full-time job and you're trying to make money trading crypto to maybe potentially leave that job. So for the normal person out there that's working the 9 to 5, I would suggest swing trading as a way to get your feet wet and learn how to trade, and then potentially stack up your crypto or your dollars, however you're doing it. If you're trading BTC pairs or USD pairs, stack up your bag, and then eventually, as you make more and more money and get better and better at trading, you can maybe one day leave that job and focus full-time on trading, and then at that point, you will have more time to look at the charts, and you can maybe dip your toes in something like day trading or scalp trading. Long story short, guys, if you have a full-time job, I would not be trying to scalp the low time frames or even day trade unless you're doing it on a day off or on a weekend. But I typically don't trade on the weekends because of the low volume. But swing trading is going to be your best bet if you are just a normal person, right? So now let's talk about our fourth type of trading, and that is going to be long-term investing. This is also called position trading. This is essentially where you're taking a large amount of money and either putting it in the market or DCAing in or dollar cost averaging into the market over time, and you plan on holding that investment for maybe even a few years, right? This is the money that you're putting into an investment and you're letting it sit there. You're going to look the other way and you're not going to come back until a couple years later, few years later, or maybe even just a year later to check on how it's performing. But this is a passive form of investment. This is not you looking looking at the charts every day or every week. This is you believing in an asset such as Bitcoin, buying it at the lows, and holding it for multiple years. This is kind of, dump your money in, shut your ears, shut your eyes, close your ears, and hope it goes up, and you're not going to pay attention to it. You don't care about the pumps and the dumps in between. You are holding it for the long term. This is a type of trading that anybody can get into if you have some money to invest. It's very low stress. This is another pro of the higher time frames and the longer term styles of trading is it is much less stressful because you do not continually have to stare at those charts constantly. You can think about it as set it and forget it. Obviously, you're going to want to check your portfolio sometimes, but you don't have to worry about every little 1 minute candle or every little dip or every little pump, right? So this is something anybody can do with any kind of schedule as long as you have a few minutes free at any point to actually invest the money. But other than that, it's pretty passive. That's the massive pro. Pro number one, you don't have to pay much attention to it. Pro number two, it's not very stressful. So without further ado, guys, I do want to just go ahead and jump into the charts and just kind of show you guys how long it takes these types of trades to play out. So we'll go down to the 1 minute. I'll try to find a scalp trade for you, let you know how long or short the position is. Then we'll head up to those higher time frames and we'll go over the different types of trading. The idea is to just give you guys some level of understanding of how long each type of these trades take to play out. Let's get into it. All right, guys, so here we are on the Bitcoin 1 minute chart, and I just want to show you guys an example of a scalp trade, a day trade, a swing trade, and a longer term position trade. Now we're here on the 1 minute chart, and I'm not going to go over why I would enter these trades. This is not a strategy video. So let's just say you got in on this blue candle and you wanted to short this on the way down. Let's go ahead and see what kind of move it would be. Let's say we got in on these candles, and let's say you just wrote it down to the body of this candle, and you can see here that if you entered this trade, and again, the reason I would have entered this trade would be because of a bearish divergence. You can't really see it very well here, but there is one there, and maybe you actually entered the trade back here off the confirmation of the bear div, and then you shorted it down to here. You would have went for a little bit of a ride, but you probably wouldn't have gotten stopped out. But let's just say you took this trade just for argument's sake. You could see it's about a 0.75% move, so take note of that. It's less than a 1% move, and you're only in the trade for 21 minutes. Now, I've been in scalp trades longer than that and shorter than that, but I think this is a good happy medium. So you're catching, you're jumping into a trade for 21 minutes, you're closing it, and then you're looking for the next setup. Maybe it's a long, you ride that long up, maybe you're in it for about 15 minutes, 10 minutes, 20 minutes, whatever it might be, and you can expect gains of about, between 0.5% and 2%, I would say, depending on how long you're holding them for or what kind of violent moves you're getting. But in this case, you could see, this does look like a pretty big drop, but it's less than a 1% move. So keep that in mind as we look at the next examples. Now, I want to come over to the 15-minute chart where I found a good example of what a day trade might look like. And you can see that I'm on the 15-minute chart. So for day trading, I'm typically looking between the 15-minute and the hourly charts. And let's just go ahead and say we entered into this trade. Again, we had bearish divergences forming on the market cipher B, as well as having higher highs on your price action. We saw the bearish divergence. Let's say you went and shorted it down. And let's say you brought it, you could have either wrote it down to here and you would have been in the trade for about 5 hours. But it being a day trade, let's just say you would have held it all the way down to here. You could see that not only were you in the trade for 13 hours, making it a day trade, because typically with day trades, you're closing your positions before the end of the trading day. And not only are you in the trade for 13 hours, which is much longer than 21 minutes, but your percentage gain is also much larger. Now, granted, this was a very violent move, so the percentage gains are going to differ, but you can expect bigger percentage gains off of 15-minute setups than you would off of a 1 minute setup. And you'll see that as we work up the time frames here. So 15-minute, enter the day trade, got an 8.9%, almost a 9% move, and you were in the trade for 13 hours. So you were in it all day. Now, I have another example here of a shorter term day trade and less of a big percentage move, but still qualifies as a day trade, right? We had bearish divergences here on the 15-minute time frame again, and you can see that not only did we get a 2.3% move, much bigger than that less than 1% move on that scalp trade, but you were also in the trade for 9 hours. So you're in the trade all day again. And, granted, this is much smaller than that 9% move, but it's still much bigger than the scalp trade. So these are the type of percentages and hold periods you can see on the 15-minute chart with these day trades. So that's why I say day trades are a perfect mix of excitement as well as, not having to stare at the 1 minute time frame until your eyes bleed. So let's go ahead and head over to the higher time frames to try to find some swing trade opportunities. Now, one thing I will say is I do like to find my swing trades personally. I like to start on the 4 hour because if I'm going to enter a swing trade, I want to hold it for at least a few days. And remember, with swing trades, you're either holding those for multiple days or even multiple weeks. But I just want to show you here, we did have big bearish divergence on the 4 hour time frame right here. And we did go ahead and get a pretty big move here. Let's go ahead and measure it out. Let's say you got all the way down to the bottom of this wick. Now, as you can see here, you would have been in this trade for about a week, right? So much longer than a day trade and much, much longer than a scalp trade. And you get about a 10% move. Now, this move is actually similar to our day trade percentages, but that isn't always the case. But you could see your hold time is much, much longer. And you can see here we had more bearish divergence on the 4 hour time frame. So let's just go ahead and measure this move and see what kind of move you get here. Again, you're in it for about 8 days and you get a 20% move. So again, perfect example of how the percentage gains get much bigger as you go up the time frames, but the hold periods also get much, much longer. I hope this is starting to make sense to you guys, why if you had a full-time job, why this would be a much more fitting type of trading style for you rather than scalp trading. But last but not least, I do want to cover a position trade here. So for the position trades, really, I would be looking at the much, much higher time frames, maybe the weekly time frame. So again, with the position trades, this is basically just long-term investing. So for me, if I was looking to be a long-term investor and hold a trade for a long period of time, I do have a strategy for long-term investing, and that is to buy in anytime the weekly money flow is in the red. So I am currently DCAing into the market right here as we are in the red on the weekly. But let's say go back in time here to 2018 and say that you were trying to build a position right here at the bottom of the bear market in 2018 as the money flow is in the red. So for a long-term investment, a lot of times you can dollar cost average in or dump your whole bag in. I don't recommend that. I recommend dollar cost averaging. But if you were getting a position down here in the bottom of the bear market, this would be a position that I would be looking to hold for at least a year, if not longer. So let's go ahead and say you were accumulating down here and you wanted to hold it into the next bull run. You would have actually held all the way through this entire bull run. And let's say, you came all the way up to your new all-time high. Let's say by some miracle, you're a genius and you can call the perfect top. Let's just say you called the top perfectly and sold your bag up here. You can see the percentage gain for a position like this is coming upwards of 1,800%, right? So it's almost a 1,900% move. That is much bigger than the scalp trade, much bigger than the day trade, and much bigger than the swing trade by a long shot. However, you're holding the trade for 987 days. So this is definitely the type of investing you want to do if you plan on buying in and not looking at the charts for a very long time and then just maybe coming back a few years later or a year later or 2 years later or even 10 years later, hoping that your investment has made you a profit. Obviously, this is self-explanatory. Anybody could do this. It doesn't matter if you work 50 jobs. As long as you have a few minutes to invest and actually get your money into the market, you obviously have plenty of time to watch this investment. If you were planning on holding this investment for a few years, you wouldn't even really care about this massive drop. You might have not even known it happened because you were planning to hold it for at least 3 years, right? So obviously all the timing is going to change here and there depending on when you sell, how long you want to hold your investment for. But that's just an example of a position trade or a longer term investment. So guys, just to do a quick little recap before we wrap up here, the 4 different types of trading that we went over is scalp trading, day trading, swing trading, and long-term investing. I hope looking at the charts and showing these positions helps you guys kind of figure out what time frames you should be looking at. Scalp trading, I'm typically looking between the 1 and the 5 minute, but only if I'm sitting at my desk trading consistently and I don't have anything else to do that day. but I avoid scalp trading if I have videos to record or live streams to get ready for or what have you. Then your day trades, I'm typically looking at time frames between the 15-minute and the hourly. And again, you're holding these positions for longer than a scalp trade, but still pretty short term. Typically, you're just going to be holding these trades for one day and closing them at the end of your trading session. Now, it gives you a little bit more leeway. You can maybe get up and get a glass of water without having the 1-minute chart absolutely wreck you, but still, day trading requires a pretty high level of engagement. And then we move into swing trading, where you're holding your trades between a few days and even a few weeks. And like you saw on our example, the percentage move is a little bigger than a day trade, and you are holding that trade for a little bit longer, taking away from the stress of constantly having to check the charts every 5 minutes. And you won't have to use as high leverage. Although it does take longer to play out, your percentage gains will be higher. And then what we just showed on the chart, that long-term position trade, where essentially you're buying on big dips, whether it be, a black swan event or, whatever was happening in 2020, I think we all know. And then you're buying those bags at the bottom to potentially hold for multiple years. And in our example, we got a 1,400% move, but you were holding the trade for over 600 days. But with this style of trading, it's much less stressful because you're just holding the trade and not really paying attention, and you're only checking on it, maybe every couple months, or, maybe even forgetting about the investment until a year or two later. So I think that's all I got for this video, guys. Again, I hope this cleared things up for you. This is one of the most popular questions I get on my channel, and I just wanted to go ahead and touch on it and show you guys examples of how these trades play out and what time frames you should be looking at, because I think it's important that if you don't have the right schedule to be a scalp trader or a day trader, that you don't bother even doing it. You just start from the get-go trying something like swing trading or maybe long-term investing. So I hope you guys were able to gain some clarity off of this video, and I hope I was able to help you understand what kind of trader you are, so you're not stuck at your full-time job staring at the 1 minute, getting yelled at by your boss, and then getting liquidated when you inevitably have to put your phone back in your pocket and get back to work. So I think that's all the time I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, yeah. Mashed out.